All right, so I'm just going to bring up the panel. This next panel is really around banks, challenger banks versus incumbents. I'm just going to bring up my whole panelist with me. So I think I'll position myself here. I'll start with Marco Ventin, who's CEO of Penta. Max Schentel with N26, he's the head of biz development. Simon Wallach, who's the Chief Digital Officer for PKO, and Elliot Lim, who's the Chief Customer Officer for Mambu. Thanks a lot, guys. Excellent. So, I'm not a banker. I've heard a lot about challenger banks and the disruption that's going on around them. So, I'd like to understand from all of you guys what you basically see the difference as from challengers versus incumbents. But if you could, first of all, maybe just introduce yourselves and just tell people a little bit about what you do, and then we'll get into challengers versus incumbents, what you think the difference primarily is.
Well, why don't we start with the challenger number one in 26 here?
Well, happy to take it. Head of business operations, so my team is responsible for business strategy in our company and the project management and outsourcing management for the group, so here in Europe, but also for the US business. And we're basically a mobile banking account operating in all European countries and in the US with a clear focus on the mobile experience.
Yeah.
All right, Szymon Wałach. I help the 100-year-old bank to become a digital bank in the cloud, and we are close to it.
Elliot Lim, Chief Customer Officer for Mambu, so we are the SaaS core banking provider. 20 years in banking, moved to the dark side in fintech, and hopefully making a difference.
I'm Marco from Penta, and I moved from the dark side of banking into the bright side of fintech a couple of years ago. So this is, and we had this discussion about this. What is the challenger side? What is the incumbent side? Mm-hmm. And I think it's what you can see in a couple of countries like Poland. It's quite impressive what you see here. But in other countries like in Turkey, and then you go back to Germany, where basically three of us somehow come from, and it's just a different century. So that's why I think it's so important to have the challenges, to be the ones who are faster, to run ahead, to show a little bit the direction. But on a traditional side, there's a lot of possibilities to keep up with that,
right?
If they only want to.
Right. So that kind of, this session was titled based on a quote from Bill Gates that I can't see a time when people don't need banking services, but I can see a time when people don't need banks. So a couple of questions for you guys. One, is that true? And two, is that part of the relationship between challengers and incumbents? Or challengers effectively trying to fulfill this vision of delivering banking services without necessarily being banks, or is that another step away?
I think from my perspective, like, why do we have banks? We have banks because the regulator said, I want to have oversight about companies that hold customer funds, right? We don't have banks for the fun of it, and we all don't have a banking license because it's such a great pleasure to be overseen. We do have it because the regulator's view is that you really need to take a close look at companies that hold funds. And I think that's why we have banks, and I think that's why it's important to have banks. In the end, you're there to use customer funds for your business, and that's why it has to been taken a close look. And nonetheless, obviously, traditional banking products, you can provide them in many different ways, and whether the banks are in the best position to provide such products, especially when it comes to payment services, I think that's very much open for discussion.
Well, I understand the Bill Gates quote a little bit differently. On one hand, you can view it as in the future, probably customers will not need branches, and that's pretty much obvious. I think that as long as the technology will go as it's going, we will see even more innovation. PKO already announced that for the next 3 years, we're building foundation to develop an autonomous bank in Poland. And we're pretty sure that autonomous banks will be faster than autonomous cars, at least in Poland. On the other hand, you can also view this quote as an example that you can take from China, where, yes, retail banks, well, banks don't service anymore retail clients because it's done through WeChat and mostly. And that's an example what can happen if banks don't pick up on the digital transformation space, that they might lose the interface with the customer.
I think it depends what you define as a bank, because the word can mean anything, to be honest. Personally, I think in the future a bank is probably a trust token. I think that's really where it comes to, and that comes back to the regulatory point. But to the first question about what's the difference between an incumbent bank and a challenger, challengers have disrupted incumbents. I think the next thing is incumbents will disrupt challengers.
Yep.
Because I think they have the reach, they have the scale. Some of the challengers, N26 being a good bet, will become an incumbent, and they will have the reach, they will have the breadth, have the capital and capacity to drive banking within regions. But a PKO, as an example, moving to a digital bank, has the reputation, has the regulation, can come back and beat all the other challengers out of the market. And I do think there'll be things we don't even have names for yet that will come and disrupt both of them. So what will a bank be?
Right. So that's a really interesting point of view. And just to stay in this space for a little while longer, with things like PSD2, where you've now got this layering and these 3 different tiers, effectively, of service levels. Is there a danger? And I think that's a really great point that you make, Elia, about the incumbents potentially disrupting the challengers. In the short term, there's a lot of narrative about banks becoming utilities, effectively, and that the value add really moves to these top service layers in that sense, which is essentially a bit more experience-led and integrated more in terms of other services, things that people do on a day-to-day basis. Is that a real threat at the moment? And before we come to the incumbents potentially coming back with the trust and the reputation and all of these things that are the assets and the value that they have at the moment, is there a danger that the whole payment service, the whole integration of payments into our lives can proliferate through these other sort of fintechs and other experiences?
I think from my perspective, we are using the terms incumbent, challengers, danger, and threat too often. The only threat everybody has, and I think N26 is already incumbent, as is PKO-SA already a challenger, because it's only the way how you define that. The most important thing is that when you manage a company, being a large one like PKO, or being a large one like N26, which is one of the largest challengers, the new ones, you have to just make sure that you don't fall into the same traps of what has happened before 20, 30 years. So you just don't go the same route, that you actually look at this, how the customer behavior has changed in the past couple of years, and you stay true to that fact. And that's exactly the point with the PSD2. I'm already getting sick and tired about this. People saying, okay, yeah, the customer data are taken away from us, etc. In the first place, nobody owns the customer data but the customer. I guess it's in the name, so you already have it. And when you look at this, how the structure should work, we will see much more banks become. It's a bad word, but I mean it in a positive way, the dumb piping of the financial services. And then you have other companies, and there might not be a bank at all, but just be the customer front and aggregating all those things. And that's why all these words like banks and challengers and all that kind of thing might be, or already is, completely blurred.
I think with PSD2, I think we're looking too narrowly at it. In fact, the PSD2, I think, will have quite quickly a new version. I would expect PSD3 coming soon, because there are some flaws in that regulation. And bear in mind that the regulation was intended to work hand in hand with GDPR, where customers were given the right to own their data, but no one actually...
How did that work out?
Yeah, but this is the part that has been missed, that there is no standard of how to get hold of your own personal data. If you want to look at markets globally, I mean, you have PSD2 regulations happening around the globe in different forms, but you have India, you have South America, you have Canada. I think most interesting case is Australia with the open data economy, and I think that's where we need to be heading. I mean, we cannot just close our eyes on financial data, because customers' key decisions, including financial decisions, are based on broader data. Like, am I paying the right rate for my energy? Could I save more on, switching energy supplier, and so on? So we need to think about opening data from all of the, not only utilities, but other companies as well, and giving our customers access to true information and financial advice.
I think all regulation adds complexity, but also adds opportunity. So I think if you look at any regulation that's ever come in, there's always been banks that have managed to find a way to make more revenue out of it. I think what the new challenges, because I think we're on the second breed of challenges. I think the difference between the first challenger banks and an incumbent was that after 12 months, the challenger became a bank. It added more complexity, more systems, more process. There was no difference. Just didn't have scale. The new breed, the ones that are being more successful, are the ones that can react to the regulation and the risk. So they're seeing a way, if you take two types of risk, technology risk, where they're seeing it as, yes, a move to SaaS, yes, a move to cloud, maybe perceived risk, but actually, it's not a problem. It's just something we have to educate the regulators and the market on. But the business risk, the risk of doing nothing, is actually the bigger piece of the pie. And that's where I think the new challengers and the incumbents who are having the digital platforms are using these regulations to drive the future of banking.
So there are 2 points that you guys have mentioned there that I want to pick up on. I'll start with the first one, which is data. And so, as you all know, data is really my sort of area of specialization, and at Metami, we've really focused on, and with the Internet Foundation, as I was saying earlier, on data as a currency, and data as this new currency. And I'd like to understand your thoughts on that, and particularly in the context of this payment sort of integration. So yeah, let me get your sort of initial thoughts on data as a currency and what that means in a banking context. I think what you said, Simon, is really relevant about PSD3 potentially coming, because GDPR and PSD2 should sort of work hand in hand effectively. Yeah. You know, one is about opening access to data, and the second is about giving people ownership of their data. And if we think about it in the context of financial data and then data itself becoming a kind of currency in this context, we'd have a much more complete regulatory framework. So I'd like to kind of get your thoughts on that initially.
Let me start with, first of all, I would be very careful as a person working with customer data to call it a currency. Financial data, next to probably medical data, one of the most intimate and sensitive data we handle. So from a bank's perspective, I mean, we build on trust, and trust in data that are within the bank is something key. So I'm really amazed when I hear some of those challengers, not yet banks, saying they will monetize customer data by selling to third parties. I mean, that's, for us, is something that should make customers worried. Yes, we do have large teams of data scientists. Its data is critical for us because, on one hand, it makes life easier for our customers, being pre-approved credit limits on. But the most important, I think, theme that was also heavily discussed yesterday is the personalization at scale. It's the segment of one, and you can do it if not only you have a data, but you know how to use the data. And I think that's the big difference that I would draw between challengers and incumbent banks, that challenger banks have been built with the idea that we want to be centered on data. Many incumbent banks don't have yet that architecture. This is probably one of the main business drivers for PKO, why we're moving into cloud, is to start using not only data, but also AI tools at scale in order to bring a different level of personalization to our clients.
But I think the big benefit that you have as an incumbent is that you have much more data, right? You know your customers for a much longer period of time. If I'm thinking about, for example, I want to be able to score the creditworthiness of my customers, you're probably in a much, much better position because you've known the customer for 10 years, 20 years, and we are all just getting to know our customers. And I think that's where the difference comes from. That's where the value in data is. I don't think you need to sell data to find value in it.
Yeah, but bear in mind, I think when you look at a little bit broader, I think what is visible when you look at KPIs for PKO Bank Polski, we have about 20% market share in current accounts, but we have 26% in cards transactions, which is clear. Like we are absolutely focused and passionate about transactions and touch points. So our retail strategy is purely focused on making sure the customers are having as frequent interactions with our bank, being tapping a card on a POS terminal, being e-commerce payment. This is an obsession for the team to make sure that this activity is as frequent as possible.
Yep.
Not even so the salary, but the activity on payments.
Jim, the point is how you make customers act with you. But the question is, what is the data strategy behind? Because I think that's, and we have heard that, I don't know, for the last 10 years that the data is a currency, etc. And you still see that whenever you go anywhere, and there's one question there with the big techs, I think these are the ones who have, to a certain extent, managed that way that the data they have to bring it back to you. And I haven't seen anything on a banking level yet that the data which are there, and there's a vast amount of data, and what you just said, Max, there are 10 years or 20 years worth of data, and I haven't seen that work out yet.
But I've always argued that, I've always argued that actually it wasn't a currency. I've always thought it was a commodity.
Sure.
Because there's a massive difference, right? So if you go back, I mean, I can speak from the UK, the credit card industry had all of this data of all the information of all the customer spend. They did nothing with it. They then let the supermarkets use it to decide where to open supermarkets, how big they should be, how they should stack shelves.
Yeah.
Banks realized very late in the day that big data was a thing, okay? And before people spoke about blockchain, big data was what we all danced around, right? People then invented chief data officers to get somebody to blame because they didn't know what to do with big data. It wasn't until they realized that analytics and the AI piece of that was really got the value, and that's where it becomes a currency. It's in the analytics and the learning from that data, not, I don't think, from the data. And I think we've spoke about data being a sort of a currency for many years, and I think that was almost misleading.
Yep.
Interesting point. I mean, I think that's one of the bizarre things about data, that it's not necessarily static. It evolves as you analyze it. That generates more data, which is richer, and there are more insights from it. Obviously, where this obviously leads us are the big challenges that are coming from the tech giants. You know, look at Apple with Goldman Sachs, for example, as a classic case, Amazon and Google, all of these payment services that they're bringing in, and obviously the massive troves of data that they bring in terms of customer insights. Is that the next big challenge that's coming?
Well, if you take recent announcements, I think it's a clear challenge, especially if you have already a perspective of what happened in China. The big platforms became not bigger than platforms. They are operating systems for many platforms. Because when you use a WeChat app, you not only have Facebook inside, YouTube, or Amazon, you also have a bank inside, you have medical services, travel services, hotel services, pretty much everything in banks included. So this is a big threat from players like Google and other big platforms that they can imagine such a service. And the way I read the announcements from Google is that they believe that in many parts of the world, banks cannot develop a truly customer-centric mobile banking services, and they could do it through their app and just allow banks to hook in their accounts. But if we are clear, and I think this was coming really well at the opening keynote yesterday, Nico, from you, that it's not about the primary account, where's the salary. Here I agree with you. It's about the primary relationship. So which products you use and where is who's using the data. Bear in mind that Google clearly, likewise like Apple, will not be interested to be a bank. That's too much hassle for them. But clearly, we are chasing the same revenue streams. I mean, payments will be going into zero, so it will be a commodity. It will not be a revenue stream, and this is already our assumption for the last couple of years. So the relevance of payments will be, okay, what can you with the data, whether this is post-financing or this is a personalization level that you can deliver around the whole value chain of payment.
So this really, and this was the second point that I wanted to come to around regulation. So Anna Batin, chairman of Santander Group, recently made a big sort of statement that I think she was talking specifically in the payment space, that a lot of the payment services companies weren't subject to the same regulation that banks are. But I think to your point earlier, Max, about banks are regulated because they're custodians of money. And when we get to this point, whether it's a currency or commodity, but we see this huge value in data. And now, I mean, you look at Libra, for example, and the controversy that's come from Facebook trying to introduce this system. It does beg the question, do data companies need to be regulated like banks for providing all of this data service? And is there a gap in the sense that a lot of these digital giants can accumulate all of this data and use that to deliver these services that integrate payment into a much more seamless life service than banks? Does that put banks at a disadvantage in this battleground?
I think the question is, where does the risk come from, right? And I would say that the regulation you have for banks clearly does not fit the risk that you want to protect people from when you think about data or payment services, right? So there clearly is a need for oversight, and I think we are seeing that the regulator is understanding that also. The regulator is coming up with GDPR because they think that data is valuable and that they need to protect customers from things they might not understand what the consequences are of what they're doing with. So I think that's the first steps. In the end, we probably can't tell right now how all of that will develop exactly. But if you handle data and if you have really power of what customers do with that, then that has a value and that probably needs to be regulated as well, but definitely not exactly the way banks are regulated.
I mean, when we look at this, the financial space where we are in, I think we can't say that we are in a very little regulated environment, right? So this is one of the most heaviest regulated things already. And it's already seen that very often it's not fit for purpose anymore. Like the whole AML stuff, the whole compliance stuff, it is not fit for purpose for the day and age we are living in. And this is when you just see how this is happening, that companies, banks specifically, they've thrown tons of compliance officers at that problem because they needed to solve that problem somehow, to comply with the regulation. But the regulation was not fit for the purpose. You should have actually looked at this, how can you solve that digitally? How can you solve that technically to go after that and not throwing just more manpower at it? And again, that's the same thing. I would not follow this cry for regulation. I would always follow a call for creating a level playing field and having clear rules. But that does not mean regulation, because then automatically you have people who have no fucking clue what they talk about, sit down and write things up which are completely outdated the day they start with the regulation.
Very true, and I hear you totally about that, which in our one of the ways that we've tried to approach that is through standards as opposed to regulation, and use standards to potentially drive regulation. Okay, so I think we've got just a minute left, so maybe just like a rounding thought from everyone on it. So banks, do we need banks in the future? Is it going to transform to bank, or is it just banking services provided by the big tech companies? What do you think the future looks like? What's from each of you?
See, I don't think it matters. I think we need banking services. I think that's right. I think we need banks. I just don't know what a bank is. A bank will be something very different. Is it a PKO, an N26, or an Amazon? Who knows? As long as we've got a way where people can move money around and we can protect against fraud but not stop innovation, that's what we need.
I would say I would disagree. I mean, banks are serving a little bit wider purpose. I mean, when you look at challengers, I mean, can you take a student loan there? Can you take a mortgage there? Do they service people with certain limitations, like handicapped people? These are not full service companies in the sense as our banks, like PKO BP. I mean, we are a bank for young kids, educating them on the finance as well as for seniors. We are a bank for people that for some reasons don't have access to digital services but need financial products. So I wouldn't say it doesn't matter, but I'm pretty sure that banks have about 3 to 5 years to either get the grip, move to the cloud, embrace the new technologies, and start competing on the same level as digital challengers or big tech, or they will be gone.
From my perspective, it doesn't really matter. I think you can be successful as long as you provide something that has value to whoever wants to buy your product, and that can be a bank that provides all the services. It can be a bank that just serves as a back end for Google and Amazon. I think that's something we see in the US as well. Or it can be a bank that, or it can be just a front end. As long as you provide value for the customer or somebody, like it can be a business customer, it can be a consumer, I think you will be successful. And whether you're a bank or whether you're not a bank or just a payment company, that really doesn't matter, I think.
Absolutely. No, this who defines what a bank is? You know, how broad the range of products is. So that's why I think it's we will be talking about good old Bill's quote in a couple of years to come, and we'll still have no result on it.
You know, I always think that the problems of the day need to be addressed from first principles. And I suppose the conclusion here is the question is, what is a bank, right? We can't answer that until we know what that is.
For next panel.
Excellent. Well, thanks very much for your time, guys.
Thank you.
Cheers.
Thank you.